Happening, everybody. So what a Monday it has been. Literally, there has been unbelievable amount of opportunities today in the market, and I really hope you guys have been able to take advantage of some. So what I want to do now is just go over just some of the few elements that I'll be looking at for the rest of this week. Now, everybody probably knows about the oil attacks, and we can see that oil right now is doing an absolute madness. But before we move on to that, I just want to discuss something. I posted a trade on Instagram of my gold trade. Managed to hit my 1-to-4 risk to reward ratio. And then for some reason, which I really enjoy the comments that come through, so keep them coming. Thank you very much. But everybody's expecting gold to reach a level in the market. Now, I personally don't care what happens with that level. I'm in the market to get my risk to reward ratio, 1-to-3, 1-to-4, 1-to-5, whatever markets give me, and I'm getting out. We'll go into talking about that in a second, but obviously that's something that I just want to talk about and the reasons why. So just looking at the charts this morning, when I done the morning reviews, we was looking for price to trade below a key level on the market in and around 98.55, just to see if we're going to get some sort of dollar strength or weakness, or to determine whether we're going to get that dollar strength or weakness. As you can clearly see, price has violated that pretty incredibly, to be honest with you, and it's had no hesitation in getting through this level. Now, I'm not really looking at the structure here, to be honest with you, because once price broke this structure, you can see that there wasn't much bullish momentum that really triggered the market or entered the market once it broke above this level. We had this huge spike, which is definitely due to news. And immediately after the impulse, we've closed back below this level and continued with this bearish sentiment. So it was very important looking at the markets this morning to see how price comes back to a major level in the market where it's reacted to the most. We can see it's obviously violated structure now. So for me personally, I would expect the dollar to continue bullish, at least for the next 24 hours to 48 hours. That being said, I'm going to use that to help me with my correlation with my other pairs. So just a little tip there. Dollar index helps to identify the strength of the dollar and will also help you to trade the other pairs with the dollar currency within it. So that being said, we'll take a look at some of the other charts, just a few of them, but that's just my sentiment for the dollar, definitely within the next 24 to 48 hours. Why? Because I'm an intraday trader, so I only care about what happens today. I'll go to bed, rest assured that tomorrow I can use the skills, the strategy, the approach and plan that I have to then assess the markets again and decide what directional bias I have tomorrow. So US oil. Now, it's a pretty sad event that's happened. It's going to have major effects on the petrol prices. But we can see this huge gap up from last night, and it was expected, especially with the news that was released to the public. This has moved about 500 pips to the upside, and my analysis this morning to the members within the RoxFX community, especially for the oil traders, was not to start looking for this gap to fill to the downside. Now, there's a big misconception with traders that once there's a gap in the market, the gap should be filled. Well, just a little tip for you all. The market will fill this gap without a shadow of a doubt. The question is, we don't know when. So expecting the market to do something you want it to do just because the notion is, or the saying is, should I say, the gaps will fill, means that it will happen today. What you have to understand is that the charts are like a blank canvas. The markets will trade up, trade down, and they will start to fill canvas over and over again. Okay. For that reason, if we think about that theory that I've just mentioned there, then eventually when price is ready, it will come back down to fill this canvas. And what would that mean for the gap? It will get filled. So my tip and advice to you today is stop expecting the markets to fill the gap on Monday. Always look for the behavioral patterns of the market when the market starts to move. So for that reason, I've said to the community today, especially for the oil traders, if we're looking to take sales on US oil, what we're looking for is the market structure to start to show a bearish sentiment, to look for a pullback indicating an exhaustion or lower high structure, and then sell the market. Never sell resistance, never buy support until you have confirmed price action. So what's our targets on US oil? Well, to be honest with you, I won't be trading it just yet. For oil traders, I would be looking at the 63 level, $63 a barrel level, and the $66 a barrel level. Why? Well, these are the major areas in the market. With the crisis that's happened, I'm expecting there to be an upset in oil prices for a little longer. And some of the levels that this market can target are some of the major highs that price action has left in the past. Notice that if we look on this chart, we have a major level here, a price respected for a moment or two. Here we go. And then finally now it's breaking and closing above. This is going to be a big indication of where our next targets can be. So just bear this in mind. My tip and my whole point of this conversation, anywho, is not to tell you where to take targets, because again, I don't care about that. This is just forecasting where this bullish pressure can continue from a technical viewpoint with a little bit of added fundamentals. Just take away from this that this gap will be filled, but it doesn't need to be filled on a Monday. Next pair we'll take a look at is gold. Now, I have a bone to pick. Reason being is I'm an intraday trader. My aim is to get in and out of the markets as soon as possible. I like participating, but I also like sitting back and not trading at all. My aim is to make money, to secure my profits, to manage my risk. So that being said, my plan and rule of thumb is to make 1 to 3%, to risk 1 to 3% per day, maximum, and to target 6 to 9% a day return. Now, it's not realistic every single day, because some days I take break-even trades, some days I take a loss, but with my risk management plan, that's how it works. So why do I need to be targeting major levels? If you can see from this chart that this is my trade, and all I technically need is this month's movement from here to here to hit my target of 1 to 4. Now, if price is coming down here, all well and good, but I don't personally want to be taking a trade where my entry is like this, my stop loss is way above structure, and my target is down here. Because even though you may be targeting a much lower structure, if we do the maths here, you have a much bigger stop loss. Yes, it may be safer in the long run in terms of pullbacks, but then that's all down to your strategy. But you sacrifice your reward just to hit a level in the market where you think it's going to go. Personally, that's of no interest to me. The way I trade is I'm looking for my patterns and my setups, and I'm looking to take the trade. If I show on the 15-minute time frame, you'll be able to see the picture that I popped up on Instagram. If you haven't seen it, I advise you take a look at it. But this is my trade, looking for price to come back to a major level. Now, a lot of you will call this the cheese man. This actually is not the cheese man, but I'm not going to go into that. What I'm looking for is price action to indicate sell bias pressure, price failing to break above structure. I'm looking to enter the trade with a sell stop entry, as I got triggered in here. And then I'm looking for price action just to go in the direction that I want it to go, and as soon as possible. And as you can clearly see, I was in this trade for 2, 3, 4 hours. Okay, in and out 4 hours. What does that mean for me? That means now for the next 13 hours, I do not have to think about trading again until 5 a.m. tomorrow morning, when I go to my charts and I look at the market structure, how it's behaved over the night, and potentially look for my setups that I'll be looking to trade for the day. Those that are holding this trade will now have to suffer price action pushing down, pulling back, consolidating, potentially pulling back up, and potentially hitting your stop losses, which are way above this level. If we see what price action has done now, it's started to pull back to where your entries are. And while you're still sitting in this trade to hit, what is this, 14.90, I'm already out the market and bobbed your uncle. So think about that. Do you really need to be targeting major levels? To be honest with you, when I look at this level, it makes zero sense to me anyway. Yeah, I can see prices reacted at support and resistance, but why is price not going to stop here? Or why is price not going to stop here? Or why is price not going to stop here? Well, that makes no sense because the target's here, but you get the point, okay? I don't want to be sleeping on a trade, and I don't have to be worrying about this any more than I need to be worrying about this. So next, let's take a look at some of the trades that have been taken today. I mean, New Zealand dollar has been battered, literally battered, and there were some absolutely phenomenal trades to be taken. Now notice this is New Zealand dollar versus US dollar. As we can see on the dollar index, using that as a correlation, the strength of the dollar has obviously reacted to this pair here. Hence the reason why this structure is continuing its bearish sentiment. It was an amazing trade that a lot of the members within the RoxFX community took. And as you can see, very simple analysis, just like my trade, looking for the bearish sentiment, looking for price to show that it's failing to break above structure, and then looking to get into this trade, however which way you obviously know how to. Great trade. Again, risk reward ratio 1-3, 10 pips stop loss, 30 pip target. Bob's your uncle. Everybody else can rest now. Nobody has to be sitting in a trade overnight. That's trade number 1. This is trade number 2. As I said, New Zealand dollar has been battered today. This was analysis that we looked at on our live session. And you can clearly see here the sentiment of the market is down. We had this gap down, gap fill. And even with this gap fill in this market, we can see that the bearish sentiment continued to show presence within the structure. We have 1, 2, 3, 4, 5 hours worth of information to indicate that price is failing to break above structure. And then as you can see, we drop down to lower time frames. Beautiful trade. We take we wait for a change in momentum, lower high formation, and then we enter this with another beautiful sell stop entry. Again, this is a trade from one of my students within the community who's doing absolutely phenomenal. As you can see, you set your trade. If the momentum continues to shift up, you don't get triggered in. If it gets momentum continues down, you get triggered in. And then as you will see, when I press next bar, this is how you enter the markets. Okay, so this was another trade taken today. This was another trade taken on Aussie dollar USD. Again, notice we're using the dollar index to identify the strength in the dollar. Hence the reason why this currency pair has moved down, because obviously dollar is to the right. So anything to the right means down, anything to the left means up. And as you can see, this was a consolidation. Wasn't the cleanest of consolidations, but we're not looking to sell resistance. What we're looking for price action to do is show evidence that it's failing to break above structure. When we go down to the lower time frames, you will start to see that this structure here is evident of price pushing up. My advice was to wait for price to pull back to create a lower high of this structure and then take the sell. But they already, I believe, got into this market before we had the live session, and they managed to get into this trade again with a sell stop. As you can clearly see here, waiting for price to show evidence that it's failing to break above structure, and then waiting for the trigger in this market, and Bob's your uncle. And this one pretty much went down. Okay. Let's just take a look at what else we have here to show. Oh, one final one. Now, this trade is from a absolute crazy dude in the community. Phenomenal trader. His entry was a bit advanced, so I'm not going to go into too much of this, but I just want to make this clear as my final tip of this session. Market structure is clearly up. We are going up. We've broken previous resistance. We have strong bullish momentum and presence in the market. Price is obviously showing signs of bearish sentiment, meaning that after a push, we potentially can have an exhaustion to create a higher low before we go up. You have this structure forming against a major level here. When you start to use your lower time frames, what you will find is price starts to react in and around these levels. Now, clearly he did not enter using the 1 hour time frame. He used the lower time frames, looking for evidence of price to show that it's failing to break back into the structures, and looking for wicks. And then as you can clearly see, he actually found the perfect entry, but he's an absolute nutter. But his risk to reward, again, is phenomenal, 1 to 3. And also at the same time, his risk management is on point. So even if he loses this trade, he can always get into the market again with no hesitation. But he chose a key level that he thought was strong enough, took the trade with an extremely safe stop loss, and that was it. Bob's your uncle. Now, very simple trading, just a little outlook for you on Monday. I'll continue to do this each Monday, but what I want you guys to do is please subscribe to my channel, like, and turn on notifications. For now, have a cracking trading week and we'll catch you soon. Take care.